Gary, what's going on, man? Thanks so much for taking out the time and chatting with us today.
Yeah, I appreciate you having me on.
Yeah. So for the listeners that don't know much about you, I like to kind of get a little background on, who Gary is, where he started in real estate and where he's at today.
Yeah, I've been an entrepreneur my whole life. Owned a bunch of businesses. I started investing in real estate in 2002, and eventually sold the business at the end of 2016 and got into real estate full time. And at that point, I was investing in other people's deals and really invested in my own education at the time. And then eventually started doing my own deals, and we've done about 280 million in real estate transactions since I got into it full time.
Nice. So quite a few deals under your belt. And so through the, iterations from 2016 till now, what are some things that you've learned along the way, especially because I'm assuming you didn't start doing one product type or one deal, and then have been doing the same thing. You might, but talk to me a little bit about that.
Yeah, I got my real estate license at the end of 2016. But multifamily, I quickly found, and because that was like running a business, and which I've done before. So value add multifamily. I did a flip. I've done some spec homes in Manhattan Beach where I live. But multifamily, like my first deal, we did 1.65 million, and we raised $1 million and bought a 42 unit in Tucson. And we should have bought the whole block at that time. It was so cheap.
Yeah.
But I learned as an entrepreneur, you kind of learn to, not take on other partners. No one likes other partners when you're running other businesses. But in real estate, it's such a team sport. And I had partnered up and kind of change that mindset, because I thought I had to have like an 8-plex and build out my concept, and then like a 12-plex, and then maybe a 20-plex. And this would have taken years and years because I had limited amount of money. But I did partner up with other people, and so we were able to go from that first deal of 1.65 million to that second deal of a little over 15 million, because we pooled resources together and brought on some other people. And certainly there's been, twice where we didn't do a deal in like 12 months, once because of COVID, and once because of the economic situation, these days, so there's ebbs and flows like any business, and you've got to have the mental fortitude to not chase anything, because you're only as good as your last deal. And so you've really got to stick to your guns, keep doing the work, and it'll pay off over time.
So what got you to get the confidence to go out there and, not get the 8, the 10, the 12 unit, and so on? Like you said, it would take years. How were you able to gain the confidence so quickly to go out there and, pull money together and get these deals? Because, usually, you hear about, stories like this where the person's been in the industry for 20, 25 years, 30 years, and 19 years into it, then they gain the confidence.
Yeah, and that was confidence is the right word for this, because I'm partnering with someone else, so I'm able to bounce ideas and see what they're seeing, because without that other person, I wouldn't have had that confidence, but knowing that I've got someone by my side looking at the same things. Hey, am I seeing it correctly? Are you seeing it correctly? And this was only a $1.65 million deal, so it wasn't a massive undertaking.
Yeah.
So having other partners really gave us that confidence. But there are times, like when we moved to the second deal, finding partners, we had so many people say no to us, and they're like, well, we're not seeing the rent comps that you're seeing, and this and that. And finally we found some partners that said, hey, we really believe in what you're doing as well, and the rent comps look pretty good. You're in the path of progress. So you like I said, you've got to have that fortitude to believe in your underwriting and believe in the work that you've done as well. I mean, we've probably, when we took on that second deal, we've probably underwritten 150 deals and looked at, maybe 75 of them, and just talk to brokers, do the reps. You got to do the reps. Just like, if you're playing, basketball or football or whatnot, that practice, practice, practice gets you ready for when you have that opportunity.
Yeah, good point. How so transitioning for what you explained there on being able to bounce ideas off partners and stuff like that and having a strong partner, how are you able to so quickly find a good partner and be able to do that? I think a lot of people struggle with that because either trust or they don't have, the knack to figure out if this is the right partner.
Yeah, we were going to the same meetups, and I saw, he was going out to properties at 4 a.m. leaving LA to drive to Phoenix and visiting Tucson and coming back, and I was doing the same thing. So I liked his work ethic. We were seeing the same things. We were going to the same property. So hey, let's go together. We did a number of properties together, but we eventually split because, which was fine. That happens in business. But we had a lot of the same skill set. So preferably you want to find someone with a different skill set, but it was great to get us from point A to point B, but we knew that it wasn't going to get us to point C.
Hmm.
So that's just something to consider as well. But yeah, if you're going to meetups, you've got to get yourself out there. You've got to get yourself around like-minded people, and that's what helps build confidence too. It's that rocket fuel, that energy when you go to a conference, when you're going to meetups consistently, and talking about what other people are doing, learning, sharing. That's what helps build that confidence as well.
Yeah, I mean, I was going to ask a follow up to that, like how to pick a partner, and maybe you can now define that with different skill sets to be able to complement the situation or the deal or what you got going on for business. So since you probably learned a lot from that, you had the same skill sets, and you said I need someone that that has this, and this person needs someone that has this. So how are you able to say, okay, hey, that was a great partnership. It gave me the ability to get out of my comfort zone, especially in a new industry. Now, how did you take that to go find another partner that doesn't have the same skill sets as you, but the skill sets that you need?
Yeah. We actually have a couple of deals together still, from
Okay.
that old partnership, but it was, um, a you know a shakeup, but to your core, like you're like your confidence is shaking a little bit too when you're like, oh, like I'm on my own, and I launched my own company. So I still bring on some partners based on the deal, but I we had an executive assistant, so she came with me, and then I hired a acquisitions and asset manager for our team. So I just built from within of my company, and then eventually brought on more people. So there's six of us now, that are working for my company. But yeah, it was just I just went on my own. I felt like I can do it, and then I hired people to add the skill sets to take other things off my plate so that I can grow. And quite honestly, I didn't know how quickly we would grow, but we ended up doing, um, 5 deals in a, let's say, 14-month period of time that totaled about 142 million, and we were off and rolling.
Yeah. Well, that's another way that would limit someone or make someone, not want to move forward because they picked the wrong partner. Especially, someone that invests in the wrong deal and then they never invest for another 30 years because they're scared to, or they don't want to lose the boat. So talk to me a little bit about that. Like, I've been around you quite a bit and I know your story, and I know that, it's inspiring, especially as you transition from business to doing this fund building with multifamily. So talk to me a little bit about, like, okay, well, for one, making sure that you have the patience to get the next deal versus just jumping in because you need to make money, or you don't have the right reserves and you just need to make something happen for your team and pay payroll. But two, like, how can you continue on if you did a deal and it didn't really work out that well?
Yeah. So having sold the business, I had some liquidity and some net worth, which is important. I think certainly there's a lot of operators that start out that don't have that, and so if they do face trouble, they have to do a capital call or they give back the keys, and they really struggle. So I made sure to not invest all of my money and to keep a lot liquid to protect, my deals. I also have to put earnest money down for deals, and to manage those ebbs and flows. So that's really important. If you have that patience, investors will keep coming back, and trusting you, because if you're chasing deals for fees, you're going to pay a price, and there's people paying the price right now. They didn't have the liquidity, they have rate caps expiring, their debt service went up, and they're having lots of capital calls, or giving back the keys to the property, and um, they're not going to be in this game much longer. Investors are not going to go to them, and so you've got to build up your bank account. You've got to make sure that you're not spending every penny on. I see some people, they close a deal and they're buying a really nice car and whatnot. It's like, you've got to invest. Like, this is a business, and you've got to manage your cash flow. You've got to make sure you have cash reserves, just like a property. Things are going to break. Things aren't going to run perfectly. So you've got to have that, rainy day fund to protect yourself, your investors, and stay the course, and know that things will change. This day will pass. Deals flow will start coming, and the right deals will come as well. Because in the beginning, we were writing offers and coming in second place, third place on so many deals, and you want to chase, you want to get that deal, but you've got to stay true to your criteria. You can't bid more just to get the deal. It's gotta work in your underwriting. So you've got to figure out how to find value. Maybe there's ways to increase income that someone didn't see, or reduce expenses that someone didn't see. But if you don't see it, you can't chase it, because it's funny. I've had one of my brokers that I've worked with. He's like, you got to get comfortable being uncomfortable. If you're putting in an offer and you're not uncomfortable, then you're probably not going to get the deal.
Yeah.
So you've got to really fine tune your underwriting and be comfortable with it. What we do with our underwriting, if we're new to a market, which typically we're not, we stick to the same market so we can be experts in those markets. But in the beginning, we would have the property management company look over, making sure we're on page with the numbers. Now we're pretty in sync. But if we're going into a best and final, we'll review it again with the property management company and say, hey, this is our operating plan. This is what we plan to do to the property. These are the rents we expect to get. Are you seeing the same thing? You've got a portfolio of 50 properties, 100 properties. Take a look at this. Let us know what you feel, and we make sure we're on the same page, because it's important that if they're seeing lower rents, or we've got to have more improvements, then that's going to change our offer. And so we've got to make sure we're on the same page.
So a lot to unpack there, because you got a lot of experience in this over the short time. I've talked to people, or at least heard stories on syndicators, or people that are doing these deals, that the last 12 to 18 months have been, just like you mentioned, pretty atrocious, depending on how you structured the business and how you were getting the deals.
Yeah.
Would you contribute what you just talked about, and then also your prior experience in business, to your success through the last 18 months? Because like you said, capital calls, handing the keys back to the bank. Um, you're not in that position. You've been fortunate enough to, stick to your guns and make sure that you're analyzing the deal, and then also having retained earnings for the business to weather the storm. But would you contribute the short amount of time you've been in real estate, and I say that lightly, because you still have a lot of experience through the deals that you've done, to prior experience in business and a coupling of what you've done in real estate?
Yeah, absolutely. I've certainly taken my knocks,
Yeah.
during downturns and running businesses, and you learn from those mistakes over time, how to deal with people, how to deal with pressure, and things not going as planned, dealing with curveballs. So you learn that over time. I'm not great at patience,
Yeah.
but still working on that. But certainly when it comes to other people's money, you have to be patient. Um, and we're dealing with big dollars, so you stay true to your criteria. You embed that thinking with your team as well, so we're all on the same page. We all understand what we have to do to succeed for the long haul, not for the short haul. We're not looking for the quick buck, but what do we have to do over the long haul? And we're all on board. We all know we need to be patient, and we're looking for the same things, and we're working together as a team to be successful.
Perfect. Yeah. I mean, I think, the last 18 months has really, shown who's still, within the capabilities of doing, this type of, career, if you will, or, deal finding and everything else. Um, what would you say, if I jumped into it today, what are the three traits that I need? As, obviously skill sets are different, finding the deals to analyzing them and everything else, but what are like the 2 to 3 skill sets that I would need or someone would need to get into your shoes in the next 6 to 10 years?
So one thing I see, and this isn't really a skill, but I want to start off with this, is focusing on one market and focusing on one thing. I see a lot of people try to do a lot of different things in real estate over a huge swath of states and whatnot. You can't get good at that. So focus on one market and one thing first. Then you've got to know your numbers, what underwriting, working with the lender. It's all numbers. Someone's got to be good with numbers, and if you're raising capital, someone's got to be good at that. And what other skill sets? Attention to detail and attention to detail, persistence. Those are really key. If you don't have that attention to detail, you're relying on market conditions for your success, because you're not paying attention to the property, you're not paying attention to the numbers, you're chasing deals, and you're not taking care of the property that you bought. And it is a business. You've got to think of it, real estate investing, as a business. It's not something that you can take lightly. You've got to put in the time to be successful. And I see a lot of people buy a lot of different deals, and they're not paying attention to those deals and maximizing the NOI. Do less, but do those deals that you do better.
Cool. Yeah. Yeah. Simply put, yeah, do less, but also, you know, if you're doing less, you can do less deals, but also almost the same amount in, production. Um, so you went from, going back to your story, you went from doing some, builds in, the city that you live in, to multifamily. What did you like about that, and what didn't you like about doing, new construction, spec home style, versus what you're doing now?
So I love the creative piece of the spec homes, and we did really well. But you've got to sell when you finish. There's no you can't hold. So with multifamily, I have a long-term loan, and the clock isn't ticking as much. Certainly, I want to sell at the premium time, but I have some maneuverability, and I've got people paying rent And typically, I mean, we're buying properties 150 units or more. So I've got a lot of people paying rent. So if a few people aren't paying rent or we have some vacancy, we're fine. So it's cash flowing. But a spec home does not cash flow, and the longer you hold it, you're just burning money because of your holding costs. And if you could potentially put a renter in there, but certainly your cost of capital is super super high. Whereas a loan for a multifamily property is going to be significantly less. Um, you're paying investors typically at the end of the sale, so it's just um, there's less risk involved. There's certainly some great upside in spec homes, but I can manage my team better with a spec home. A lot is on me versus managing, taking advantage of my team as well. So um, that's really where we've been focusing on and has led to our exponential growth.
Okay. And so what do you project? I mean, last year, so what did you guys do last year on at least, deal wise and the action items to get that deal? Like, what do you look at metric wise, like, to get deals? Are you calling brokers? Are you, sending out mailers? Are you guys getting in front of, sellers that have owned for 20 years? How do you get those deals?
Yeah, so we only did one deal last year. We
Okay.
closed it at the end of December, a $33 million deal in Tucson, 256 units. And man, raising capital last year, brutal.
Yeah, I
Uh,
bet.
but we pulled it off somehow, some way. We've been in the same market forever. So we have great broker relationships. So whenever they have something, they send it to us. They know we can close. Um, there's only a few brokers. The where we operate in, it's not really for direct mail or whatnot. You're going to see that maybe at 40 units or less, where you might find more of a mom and pop owner. But at our scale, you're not going to really find as much mom and pop owners. I mean, I'll get letters like every few weeks from someone that says, "Hey, I want to buy your property," but I would never take the time or an energy to work with someone without a broker, because the broker is going to make sure they're the right buyer. Certainly going to cost me more money, but it's not going to waste my time, and I'm going to get top dollar because it's going to be on market. So um, for smaller stuff, yes, yellow letters I think work, and direct to seller. But for that scale, so we just if we certainly call brokers, they call us. I try to meet them for coffee or lunch or dinner when I'm in the market, and just stay in front of them. So like next week we have NMHC, so I'll see all the brokers. We'll talk about the upcoming deals for the year, what we're looking for. So you just want to stay top of mind, because that's where we've gotten a lot of our deals, because maybe a deal just crossed their desk, or we're having a meal together and they mention a deal. So we bought a student housing deal, and the broker casually mentioned it to us over dinner, celebrating a deal we just bought from him. He didn't think we'd want it, but when he was running through the numbers, it really made sense to me. This was during COVID. It was 52% occupied. We went back to the hotel room that night, underwrote the deal, looked at it the next day, put an offer the day after that, and closed within 45 days. And within 6 months, we got it to over 90% occupied. And we quickly doubled the value of the property in such a short period of time, because we saw value where others didn't. And the broker didn't even think we'd want to buy it. But running the numbers through my head, what he was telling me seemed like a really good deal.
And was that out? I mean, that's not your I would say that's atypical for what you guys were buying at the time. Or was that something that was kind of in your wheelhouse, the student housing?
It wasn't, and we converted to multifamily, but we were struggling, getting deals. So we were kind of looking for hotel conversions, motel conversions to multifamily. Like, how can we get some better deal flow, because we're not, the prices are too high. There's just not enough on the market. So we were trying to be creative, and I think that's been one of our superpowers, like finding value where others have not.
Okay. And then, looking at it, if I'm an investor, and you're trying to sell me on the deal, if you've came to me for, multifamily for the last 4 years, and then you come to me with this, how do you pitch them differently? How do you pitch me differently?
Yeah, so good question. It's still we're pitching them on multifamily. We're saying, hey, we've spoken to the an attorney about getting it, switched over to multifamily to, make sure we have the correct permits. Um, a land use attorney. We have a lender ready to go. This is our thesis. Um, we had a very short period of time because the seller wanted to get it done within 45 days. So we needed to check all these boxes so we can confidently talk to investors. Wasn't a big raise, and investors, luckily it was, they it wasn't a period of time where it was hard to raise money. If it was a period of time that was hard to raise money, maybe we didn't get that deal done. But at that period, it was okay. So they went with us, and they're going to be happy when we ultimately sell that deal.
Yeah, I mean, I think like you said, it's all multifamily. It's just a little bit different of a verbiage
Yeah.
on saying, hey, this is what I think the biggest thing, and maybe you can either rebut this or back me up, is there's still you got an investor, they're still looking at the returns. So the biggest thing is returns and confidence in the syndication deal. So
Right.
yeah.
And,
um,
and it wasn't a new build. It wasn't in a different market. It was the markets that we've been in. Relatively same asset class, so it wasn't that big of a stretch. It's definitely something new to us, but it wasn't a tremendous leap of faith for an investor.
Okay. And have you always been in that Arizona, Phoenix, exterior market, or have you looked at other markets before?
Yeah, so we've been looking in Albuquerque and Vegas and the Denver suburbs for probably 2 years now, made some offers. We like to build, thousands of data points so we know if a deal is good or not and develop broker relationships. We haven't pulled the trigger on any, we haven't gotten a deal done in any of those other markets, but certainly we keep keep acquiring deal points as we underwrite deals and look at deals. We'd love to get something, but it's again within that concentric circle. So, we're not looking in Texas, we're not looking in Florida. There's plenty of other good markets out there, but we want to be experts in the markets that we're investing in. We can only invest in a few markets, and it's got to be where we can get to on a consistent basis. Here I am in Los Angeles. My team is based in Phoenix, so Phoenix and Tucson, obviously, we like that market. Um, High population growth, high job growth, job diversity, low cost of living. So those are the things. Business friendly, landlord friendly. So those are the things that we're looking for in the markets that we're investing in.
Okay. Okay, cool. And then, how different is it going from, one market to the next on, data points and stuff like that? So if you're going from Phoenix to, and I know you mentioned earlier, like, stick to one market, but I would say once you really capitalize on that market and know that market, ins and outs, how can you take that model and go to another market?
Yeah, and every market, even the submarkets are different. So in Tucson, when things really took off in Phoenix, we were finding deals in Tucson that were $100,000 less per unit. Your capex is going to be less. For an interior renovation in Tucson, you're spending 10, 12,000, where in Phoenix it's going to be 16, 18, maybe 20,000. So you've got to really understand that market, and the submarkets. If we're in the real nicer part of Tucson, like Oro Valley or North Tucson, certainly we're going to have to spend more. So again, looking at a lot of deals, underwriting, knowing your comps, super, super important. You can't just jump in like, hey, a broker sent me this deal in Saskatchewan or whatever. And it's like, it looks really good on paper. Like, I'm going to jump in. And
Yeah.
it's like, you just can't do it. That broker, I'm sure, sent it to all the people that he knew, and none of them bid. So let's get that person from LA, because he knows that person from LA probably will overpay.
Yeah. 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 Okay, and so how, talk me a little bit through stabilizing kind of, you talked about a little bit about it on that student housing. You buy a property to stay and you want to stabilize it. You're trying to increase rents and everything else. So walk me a little bit through the methodical process of doing that, especially on a 250 unit in Tucson or Phoenix Metro.
So we're going to attack the exterior first, because if someone pulls up, you want to have a really nice exterior. Um, because if you're focusing on the interiors and the exterior, doesn't look good, it's going to be hard to rent it up. So let's focus on the exterior first. So maybe it's paint, maybe it's some design features, certainly landscaping. What other amenities can we add that doesn't cost a lot of money? So maybe it's a dog park. It'll cost us 15,000 all in. Certainly, pool is another area where they typically have old furniture, so you want to get nice, newer furniture, colorful furniture, and maybe a barbecue and a pergola that you can add. It just doesn't cost a lot of money, but when you spread it out over so many units, it adds a ton of value. And then you want to make sure your model looks good, the furniture is up to date. Now, we won't keep models on small properties, but on the bigger properties we will. But you can go online and create a faux model online, and they'll put in furniture and whatnot into the pictures, and it looks great, and it does, yeah, for a couple $100 you can have an online model as well, which is great. Um, and then you've got to make sure you have a great on-site team that understands how to lease up the property, how to talk about the property. And I think that's sometimes we've struggled with that. We've with a new leasing agent or a new property manager, and we're like, walk the comps. Why is our property better than the others? Know what their pricing is at. Look at their interiors. Really understand the market so that you can communicate that to someone that's coming in. And we'll see that sometimes we'll see a new person, and our leasing might be struggling. So we know something is off. And so we'll secret shop our properties to make sure our staff are on top of their game, and really hold them accountable to what we expect.
Yeah, yeah. I mean, I think that is key. I haven't really broken that down or had a conversation on the podcast about that, but secret shop, be able to show up and they're not selling it appropriately, or they're downplaying what the upgrades may be, or breezing over them. That a lot of people are looking for that. I was having a conversation last night, and um, people are going to pay more a premium for a property. I mean, granted, they're not going to pay, extremely high for a property when you can go down the street and get the same product, but they're going to pay a premium if you continue to raise the rents, but you're also a good landlord and you're taking care of the property exteriorly and inside those units. And there's updates because people will pay a premium for updated communities. I think there's a lot of, you know, uh, bad mentality around that. Like, hey, slumlord mentality. Like, I'm not going to update the property. But I'm also not going to raise the rent. Well, those people will end up losing 100 to, I'm talking more like a, 2 to 4 unit, but same thing for you. They'll lose a lot more in property value, especially
Yeah.
you coming in, my guy, Gary, taking, a huge deal and making it better. Right.
Yeah, we try to create win-win scenarios. So we've got our investors that we're taking care of, and our residents. And we'll come in, we've transformed communities and increased rents $300-400. We're just going to market. We're not trying to gouge anyone. And residents stay, they'll move into the renovated unit. I was shocked when we looked at our, how long tenants have been with us. And it's from the time we took over to now, it's some residents have been there 3-4 years, or a lot of residents, I should say, and they're paying massive bumps because they see the value that we provide. If they go somewhere else, they'll have to pay more and get less. They see that we're taking care of the property and we're creating a safer, nicer community, and they want to stay.
Yeah. 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 100%. Well, I know we got a hard stop, so let's transition to the last couple. One is what's a good book that you've read? Doesn't have to be about real estate, could be about business, that's helped you transition from where you were to where you are now.
Yeah, I would say Crucial Conversations, and
Okay.
that'll help you in life. because it's about having those tough conversations that we all have and we all hate doing. Even after I've read the book, I think twice, you know, it's so important to understand how to talk to someone correctly, because you can either go aggressively or you can make them see your point of view and understand their point of view better. So that book I feel like is so incredibly helpful.
Yeah. Okay. Good. I've never heard of it, so I'll definitely get that one. The second question is, you're remote. You as essentially for you buying properties in Phoenix, and then also having a team. What's a good online resource or tool that you're using to make you and your team more efficient?
Yeah, we use Google Drive.
Okay.
So all of our docs are on there. When we have a weekly meeting with our property manager and my asset manager, they fill in the KPIs and we just track everything. So it's free, it's easy to use. All the information is up there. Anyone can access that, and we just track everything. And so we really like Google Drive.
Yeah. No, it helps out a lot, especially spreadsheets and everything else. Okay, so where can people find out, about Gary, what you guys are doing today, and any deals that you may be having coming up?
Yep. You can go to our website, breakofdaycapital.com. You could sign up for our newsletter. We've got a lot of investor resources, my real estate investor podcast, social media. So that's the best place to find me. And then certainly connect on Instagram and Facebook, LinkedIn. Well, I'm on all of them.
Awesome, man. Gary, I appreciate your time today and going, diving a little bit deep on your experience, what you've been through, and what you're doing today.
It was a pleasure. Thanks for having me, Peter.
Thanks, Gary.